Hey guys, Curt Graham here, VP of Brokerage at Elite Insurance Partners. Wanted to put out a quick update about some news that we got in our industry. Unfortunately, it's not great news, but we've got to address it as quickly as possible because I don't want anybody screwing up and making the mistake of continuing to do something the company doesn't want you to do. What's the company? Allstate. Most of you probably received an email. If you haven't seen it, it's maybe in your junk folder, but definitely something to take a look at. We're going to go over it real quick. They tell us, dear value agents, here's some updates to our Medicare Supplement product line. They're making these changes as a broader shift to return to the foundation that built our success, offering affordable, flexible coverage for individuals and families through our core products. When they say core products, everybody knows Allstate is a PNC company. Their car insurance, homeowners insurance, things along those lines. Medicare Supplement wasn't really their thing. So what are they doing? Well, the first thing they're going to do to make you not want to enroll with them is they're transitioning over to paper-only applications, eliminating their electronic portal. They are also, if that wasn't good enough, suspending all advanced commissions. And the reason they're doing that is because they're withdrawing their Medicare supplement plans. Now they do highlight here just our Medicare supplement plans. They're pulling out of the Medicare supplement market. Now, like I said, is this just an Allstate thing or is it industry wide? Well, let's look at some of the trends going on in the industry. I want to jump over here to Medicare Market Insights. By the way, I'm going to include all of these links in this video in the description. So if you want to take a look at these articles, absolutely take a look at them. Some great resources. Medicare Market Insights is wonderful. Jared Strock and his group put out a bunch of great information. MedSup growth returns, but underlying risk remains. If we scroll down in this article, it takes us to this little graph right here that I think is extremely important. And what we're looking at is the premiums and the claims and overall what is going on with the loss ratio. And this isn't for one specific company. This is for the industry as a whole. There was a trend line going on through 2019 and then COVID hits and you see it just fall through the floor. What happened during COVID? Well, we all know everybody was sick, kind of. But really what happened was elective surgeries were cut off. A lot of those visits that people would have going to the doctors, they put them off. They weren't leaving their homes. But a big thing was those elective surgeries. And elective doesn't mean you didn't need it. It's not a nose job, okay? It's not cosmetic surgeries. It's elective things like knee surgeries and hip replacements. And maybe somebody's got a hernia that is uncomfortable but not life-threatening. It's elective surgery. So those were put off. And as you see over the next couple of years, it starts taking off. And that is what we want to jump to. By the way, all of this information is coming out from the National Association of Insurance Commissioners. This is their report that they put out and breaks down a lot of things about loss ratios. Again, this will be linked in the description. Here from CSG, a great tool for quoting, but also they put out a lot of wonderful information as well. Medicare Supplement, average claim amount per policy, okay? And if we look at this, there's a trend. It was going up. This red trend line is when it fell off with that 2019 COVID-19 hit that we had there. But we have crossed through that trend line. Now, if we look at it more plan specific, it does tell a couple varying stories. Looks like Plan G has caught up to that trend line, but it doesn't look like it's going to stop there. It does look like it's crossing through that trend line this year. Plan N fared a little bit better. It's a little bit below it, and Plan F shot right through it. So if you just had to guess what's going to be going on with rates in the upcoming years, you're probably going to see higher rate increases on the Plan F, which has been retired, but we still have plenty of clients that are still on that plan. Remember, everybody that was eligible for Medicare Part A and B pre-2020 was allowed to enroll in a Plan F. Everybody post-2020 had to start enrolling in a Plan G, but Plan N has become more and more popular. It is a, pretty far down the list, but still a very popular plan. That's what's going on in the Medicare supplement world. But is it only Medicare supplements, or is it also affecting other things? Let's hop on over to Medicare Advantage plans. Medicare Advantage plans are under pressure as well. Once again, I'm going to hop down in this article. What were the plans doing in 2024? Well, for all of us that went through 2024 AEP, 2025 AEP, we all know they were pulling a bunch of their plans out of the different markets that weren't profitable for them. Hugely affected Humana. United Healthcare still grew a lot during that time period, but Humana and Aetna lost a lot of their members because they decided to pull out a lot of those markets. Now, if we look at just the big boys, I don't think that's necessarily fair. So let's hop over here and let's look at all of the trends for Medicare Advantage and Part D. And if we hop down in the article, if we look right here, regional carriers are the red line, national carriers are the yellow line. I'm sure you've experienced this if you've been in the industry as long as I have for the past 15 years. I've seen smaller regionals pop up and disappear just as quickly as they popped up. So that's what you're seeing. Harder for them to control cost. So those big national plans are still going to be extremely dominant and extremely important to have as an agent in your portfolio coming up in the next year. Now, this sounds like a negative video. It's all negative, negative, negative. Don't worry. We've seen this over the years. It happens. There are always changes in the market, and that change leads to opportunity. And we've got plenty of opportunity because we've got 68.5 million people on Medicare. If we look here, that line is going up. These are total enrollees. I'm sure you've heard it 1,000 times. I know I have. Oh, there's 10,000 baby boomers a day turning 65. It's still true. They're still turning 65 every day. Now, we are seeing that a lot of them are putting off enrolling in Medicare a little bit later. I think our average is somewhere in between 68 and 69 years old for our average time of enrollment. But a lot of them are still enrolling at 65. Plenty of opportunity. There's right around 34 million people on both. It's about a 50-50 split at this time, fee for service or original Medicare. And then on the MA side, as we all know, there's just over 34 million people on that. Now, that being said, if you're doing the math in your head like I was, we're talking 34 million people that are on MA and 34 million people that are on Medicare Supplement. We hop back here and we look at this little section about the lives. There's really only 13.7 million people that are on Medicare supplements. So that leaves a lot of people that are still on just original Medicare that we can help out one way or another, either by helping them get enrolled in a Medicare supplement or a Medicare Advantage plan. So we still have huge amounts of opportunity, still the best business in the world to be in, and something that you just have to be paying attention to all of the different changes that are happening from the compliance side of things to changes in commissions and everything else along those lines. Definitely the time of year to be reviewing all of your different contracts. If you lost Allstate, is there somebody else that you need to pick up? Do you have all of the core carriers that you need to have to be able to service your clients? Extremely important to do during this rest of the year. One other story that I want to point out here. As everybody knows, United Healthcare has been having a rough couple months. Their stock has been getting beaten up. The CEO has stepped down. There's an investigation announced by the DOJ. Do I think it's the end of the world? Is United Healthcare going anywhere? I don't. I think they're probably a good thing to look at right now. But United Healthcare did announce as well that they are cutting their Medicare Part D or their prescription drug plans commissions. So be aware of that as well. If you're contract with United Healthcare, obviously still help out all your clients with their enrollments and their Part D plan, but just know that they are cutting commissions. That was just recently announced as well. Hey guys, I hope this was helpful. If you have any questions about what's going on, get in touch with me, reach out to us. If you want to review all of your different contracts, make sure you've got everybody that you need. We're here to help. Can't wait to speak to as many people as I can, to help as many people as I can, because that's what we do in this business. When we help out agents, they help out clients. It's absolutely a great business to be in. Positive about it. Let's keep going and keep pushing forward.